All right, guys. Thank you, everyone, for attending today. Yes, I actually met Rebecca 5 years ago, moderated a couple sessions together because I spent 10 years of my life in China, Beijing, China. I lived in China, and I built KPMG's consulting practice during that time. 2 years ago, I came back to LA to start up our business here, and I've been back to KPMG in LA and reconnected with a lot of my friends overseas too. But during that time, like many of you are looking at building and starting a business in both shores, not only was I providing consulting services to client, but I also had to deal with how to start up a business, how to get the right business models, and for us, less so funding, but just really navigate the balance between the industry changes as well as the regulatory changes. Very exciting. In any case, for today, we're going to be talking about digital entertainment, what that all means. And the last part of that word is venture. How do we get the deal? And on the panel today, we have four very distinguished speakers who have very, very specialized experience, deep experience in their particular area. I'm going to ask each of them to give like a 15-second kind of intro of themselves. Then I'll flesh it out as we go through the discussion. Bert, why don't we start with you, Bert?
I'm Bert Reuler. I'm with Mattel right now, and I've spent the last over a decade or so in kids' entertainment and toys and digital and all the kind of stuff in between, mobile gaming, et cetera.
Great.
I'm Gary Ko. I'm actually from here originally, from Disney. Worked about 20 years there. After that, done a bunch of small companies and in the internet space. Then moved over to China when Wanda recruited me to be their CTO to build the largest movie studio in the world. And actually, this week is my last week with Wanda, so I'm leaving Wanda. So I'll be back in LA.
Come back home.
So I'm Marc Jackson. I run a firm called Seahorn Capital. And I've been in the video game industry for almost 22 years, but most of the last, say, 15 years I've been involved in both project finance and putting together projects, and then more recently, in the last, say, 7 years, I've worked with expert teams that are coming, either forming video game companies. In the last 3+ years, I've really focused on early stage, mostly content-oriented virtual reality and augmented reality companies. So I'm quite steeped in the digital entertainment realm and very happy to be here. Thank you, Rebecca.
I'm Chang. We're Upfront Ventures, so we're based in Santa Monica. We're your early stage tech venture capital firm. We just announced our latest fund of $400 million to invest in mainly seed and Series A venture capital. And we look across all tech, but we do have a strong DNA in consumer media, entertainment, and VR interactive media as well.
Great. Okay, so you can see we've got some pretty good expertise here. Bert is actually from the consumer product business, doing toys and then movie and entertainment back and forth. Gary is actually building the studio. Marc, investing in new content, emerging content, actually been around for a while, VR, but it's kind of popular now, but it's picking up a lot of steam. And then Chang is really the ones that, at the core of this, is inspiring companies to take that to market, right? So with that, I want to start off with how do we actually define digital entertainment? That's a very, very loose word, actually, because digital, most content is digital in some way and has been for a long time. And entertainment, has a lot of different aspects. So you could talk about, obviously, movies. You could talk about short-form videos. But you're also talking about games, theme parks, right? Why not theme parks? There's digital content in theme parks. And if any of you have been to the latest Shanghai Disney, you would see some of those rides are amazing. The Pirates of the Caribbean, completely different experience. And immersion kind of experience around entertainment. Not only that, when you look at the players that are getting into it, it's not the traditional studios or entertainment, quote-unquote, business, but you also have people in the consumer products business, tech companies, retailers, right? Amazon's getting in that business. Even automotive is getting into entertainment business. And for those of you who know, here in LA, we have a small little company called Faraday Futures, right? Started off an entertainment company. Their goal is to grab you in that car and your eyeballs for 2 hours and flash all the content they can. So this is very, very dynamic, this whole area. And what I'd like to do is just kind of go through our guests here and ask them what they think the boundaries, if you will, of digital entertainment is about. So maybe I'll start with you, Gary, because I don't want to date you, but you're probably the most traditionalist, right? I mean, you've got soundstage, you've got cameras. You were going geeky with Will over there talking about all this technology for studios and film production. Maybe tell us a little bit about what you think in your space as you created a studio. How has that changed, even in a traditional studio sense?
Well, I think that digital entertainment is very broad, and from the studio point of view, it's still very, very, very traditional. I mean, the movies and content are all made in a very structured way that has existed for many years. I want to say 100 because the movie business is about 100 years old. But there is so much that has changed, and I think the biggest disruptor, as most of you know, has been digitization. Digitization has basically disrupted the business. And what it has done is that it has basically created even more niche entertainment. I think that instead of taking away a piece of the pie, but it really has changed and maybe even broadened the pie. And there's so much ways that you can get entertained now. I mean, there's the traditional long feature format to episodic TV or episodic online viewing. And there are now emerging, short, very short entertainment that's in 5 minutes, 2 minutes, 3 minutes. We have all seen it in either YouTube or in a lot of other entertainment venues. I think that it has broadly changed and opened the venues of distribution. And because of digitization, I think it has been able to have all media, all content be repurposed as well. But I think the making of the content is still very, very traditional. It is all digital, and the barriers of entries has definitely fallen down. I mean, technically, your kids, or those of you who are old enough to have kids, can actually make very, very compelling content and distribute it, right? I mean, even the full-length features. I mean, we've seen it on YouTube, seen it on Vimeo. It's quite amazing that all this has come within the last 10, 20 years. If you start all the way back from, YouTube, you saw the budding YouTube stars like Michelle Phan, the Smosh Brothers. Now they're making lots of money, and in a very different way. My son just graduated a couple of years ago, and he's in that business. He's making content for that business. A few days ago, we had Vox Media come to our house to shoot a short room makeover program for them. And they were equipped with very, very sophisticated equipment with lights and cameras and makeup artists. And so it's starting to get not just very amateurish, but it's starting to get very sophisticated as well.
That's very
and you find
interesting.
this company going up the food chain.
That's very interesting. You're saying that the studio, which you've spent about $1 billion building, is being disrupted by teenagers walking around with an iPhone.
Definitely. Yeah, definitely. I mean, even the traditional
Well, let me
directors.
see if I can take that to the next speaker here. Bert, you're not originally in the studio business, but you're producing content. And when you look at the traditional studio environment of producing and all that heaviness, do you feel you can be more agile, and what do you do about that aspect?
Yeah, it's a good question. There's obviously a strong tie between feature films and entertainment properties and kind of evergreen brands. I think YouTube is an undeniable force, especially as well for kids right now. I think actually last year, being a YouTuber passed being an astronaut as the most desirable career that a kid wants to have. That's fact. So they see the unboxing videos, they see all these other kids that are YouTube stars, and so there's a sweat equity, I think, in there, but also that's where they're going for content. So Mattel in general has pivoted pretty hard towards YouTube in the past couple of years as a mechanism for distribution and engagement.
Okay, so I just want to kind of dwell on that a little bit. We're talking about traditionally a business that heavy in fixed assets, right? You have to invest, big real estate investment, big equipment, right? And then suddenly that's changing because the democratization of content creation. Next, that concentration of profits not in the studio business anymore. It's moving towards the creative side, which traditionally it has not been. So the economics is changing, and you've got people who now are creating content on YouTube that are multimillionaire. So the formula for this business is changing. And I'm going to ask, Marc next, because he's actually a part of that driving that disruption and pushing that balloon, if you will, to different places. And so, Marc, when you look at the new content era, and it's all could be device independent, could be device dependent, you're creating much more immersive experience in VR, AR, and so forth. Can you kind of just walk us through what that business is like, and then talk about where those opportunities are that you see?
Well, that's kind of a broad question, but I mean, I think to kind of riff on the same theme of digital media, what I think and where I focus a tremendous amount of my energy is the fact that the digital is the definition of disruption to the entertainment industry and to in large part, the media industry as a whole, all the sectors. People don't really realize how badly video games, or positively, if you look at it that way, has been disrupted by the digital revolution, which is the combination of the internet plus rapid device proliferation to consumers, and in waves of successive proliferation. And so in the video game industry, we witnessed going from essentially a boxed product that has a long marketing cycle and very, very defined marketing practices to turning it completely inside out, where you're looking at the consumer having a tremendous amount of power and influence, and where data management and a keen understanding of the immediate reaction and the immediacy of the content experience becomes all important. And I think we see that happening, whether it's in the kind of mobile AR sector, which a lot of people are getting very excited about, including me, but also in some of the exciting areas of virtual reality, where it's coming in contact with both video gaming but also storytelling, where we're seeing location-based opportunities. But even those, you need to be looking at different ways of engaging that are much more immediate and that follow a social graph and follow those types of patterns.
Thanks, Marc. That adds another factor of complication to this model now. So we've just moved now to the consumer side, the demand side of this equation, creating all these other dynamics to the business. So as you can see, that when we say disruption, we're not talking about just shifting the way we do business, but also the profits, as well as the consumer, the market, the delivery. The whole thing is being changed as we speak. Now, I wanted to go to next is Chang. You and I have spoke before, and you shared with me how you're looking at some of this landscape shifting and what disruption's going on, and you're basically, you're kind of like the center of our discussion today, because all the startups are looking to you. How do you bring logic around that and really start to think about funding and coaching?
Yeah, so echoing some of the themes that the folks here have touched on, we see a lot of interesting disruption around the business model, and there's a couple trends I want to highlight. Like one, like following what Marc said, which is we're seeing just new business models emerge. So there's a proliferation of OTT. I think last year the count was there's over 100 new OTT services that are created. So we get these niche services all the time. But I think the difference between the winners versus the ones that probably just burn too much cash and are not sustainable is that you need to have a business model that stands upon multiple prongs. So you can't just have subscription or ads. It's probably not enough anymore. I mean, the good ones, they also do merchandise. They also are truly building a brand. They're doing live events, and they're just engaging their audiences wherever they are and truly building a brand. And I think that's what it'll take to win. Another trend, and following on the UGC comments from earlier, that we see as live streaming is becoming a pretty large and interesting market. And it's actually much bigger in Asia than it is in the US. But even in the US, we're seeing like millennials being very interested in having content, consuming and creating content on the mobile devices. Also, like the growth of esports is a big driver. But live streaming, it's getting increasingly bigger and has interesting implications for direct-to-consumer marketing, for even like reality TV. And in Asia, you can argue that, perhaps there just isn't as much quality content. This is why consumers are going towards live streaming, why it's growing so rapidly. You can also look at maybe folks work harder in Asia, so they need they need entertainment. They have more need for it. But in the US, we have like Periscope, and we see Snapchat experimenting features with Snap Live, and more recently Snap Maps. And these are essentially the emergent live streaming products, and we think that's a very interesting business model as well.
Great. Thanks so much, Chang. So that's very insightful. As you can see there, the very different perspectives of how that landscape of the digital entertainment business is changing, moving, and it's actually expanded very rapidly. The next half of the discussion I want to talk about is the deal, right? So we talked about the market. What about the deal? And maybe I'm going to start first with Bert here. When we talk about the deal, and Chang actually talked about it a little bit, we'll come back to her later, about the business value, business plan, strategy, and all of that. But a lot of the deals that we're looking at are creative in nature. They're inspirational. There's not a lot of discipline per se. It's not like they have an accountant and a lawyer and an HR specialist and an IT guru on staff. They have to make all this work as they go along. And Mattel does an accelerator program, and they're looking at these starts. So I want to ask Bert, you're in a big company. You have fiduciary responsibility, your shareholders. You want to inspire, you want to grab this opportunity. How do you deal with that?
Quantifying the creativity piece?
Yeah.
I think it harkens a little bit to what Chang just said. It's got to be kind of a multi-pillared thing, right? And something, creativity is kind of rife within the toy and entertainment space. It's like the currency by which it exists. But what is kind of the break frame creativity is the creativity that can be scaled into a platform. So those are the things that might allow many types of IP to sit on top of them, a particular way of building something or interacting with a product, or even kind of interaction levels and how people are looking at that. Connected toys have been around for a really long time. What's special about this connected toy? Mattel has a wide portfolio of companies all the way down to Fisher-Price, so sometimes it's more about utility and a nursery offering or something compelling there. But really what we're looking for is scalable, stable, creative solutions. And sometimes you just have that flash in the pan, though. It's a really trend-driven business as well.
Right. So I'm gonna skip over to Marc. You're also, and I don't, Marc didn't talk about it earlier, but he's got a securities license, so he goes beyond just funding a deal. He can put together a complex set of deals to give companies exposure.
You could open up a very, very complex discussion. I'm a registered broker-dealer, but in large part because I was putting in the mid-aughts and then 2000s a lot of structured project finance. and had several lawyer friends tell me,
So
you really
you-
should be a broker-dealer if you're going to do that.
So, you know, you
But
look at
that's the investment banking license from the
Right.
SEC, right? Right now, I focus more on the problems that you were alluding to in helping startups focus on, especially right now in the storytelling or video gaming and VR, how you can address the various issues that come up. And some of them have to do with early adoption and adoption curves of technology, but many of them have to do with kind of the nuts and bolts of how do you go on to build a business, raise the capital that you need, and cross that with imperfect capital formation and expectations from different types of investors. It's a difficult field, especially in rapid technology movement. There tends to be capital that'll move very quickly in one direction, and then it can change course very quickly. And so, early stage companies, especially that are highly creative, have to really understand how to do that. And a concrete example is with a VR gaming startup. They have to understand that they need a long runway right now because the VR headsets are in the process of being adopted by consumers. There's not a robust marketplace. They have to also look at different types of situations where they can reach their consumers, whether it's direct to consumer downloads through app stores or through location-based entertainment. So I do a lot of coaching with the teams that I work with, or I make angel investments and then join as usually a hands-on advisor or board member.
Terrific. So we're going to go back to you, Chang. So, we've seen here, what I just gathered is while there's some basics around the financial discipline, there's a lot of gut feel here is what I saw, right? Because you don't know where the industry's going. You got to make some bets. You're hoping to listen. Maybe you bring some of your own experiences in there, but there is no formality or discipline in this. You're running a fund. How do you deal with this?
Yeah, we invest at the seed and Series A stage, which is a little not in day one, definitely not in day one. So we typically come after some angel capital or even pre-seed capital or accelerators or incubators. So we do have the luxury of having some traction and seeing the progress to date. But I think what's the most important to us are two things. One, that you're tackling a big enough opportunity, that it's a big market opportunity. The trends are creating an opportunity at a unique point in time, and your solution is the best position to address that. And second, we're betting on you as a founder to be able to and your team to be the ones to be able to crack the opportunity. And that's pretty typical if you talk to a traditional VC such as ourselves. This is how we invest. This is how we assess our investments across all sectors, not just entertainment.
Right. So Gary, you were involved in bigger deals cross-border, right? So you looked at a lot of transactions, a lot of opportunities to invest in the U.S., buy with Chinese money, as well as vice versa. So from a deal perspective, let's look at the startup side of this. A company that's here, what advice do you have for them that's dealing with Chinese investors coming here, whether big or small? How do you deal with, obviously there's cultural differences and so forth, but what were some of your experiences? What are some of the coaching points?
I think obviously there's always culture differences, and there is different expectations from people from China. I think that the way they look at things are definitely different. A lot of vetting, a lot of clarification. And I think that to save a lot of pains and heartaches, I think a lot of time, especially when somebody is trying to get you to fund a movie or whatever, I think that it's kind of to set expectations correctly. People tend to overextend like everywhere else. People tend to trying to be amicable and agreeable. I think the lessons learned we had was just to make sure that number one, expect for setbacks, because in China there's always misunderstanding. There's always government issues.
Purposeful or non-purposeful misunderstanding?
There is always partner issues, and of course, not to say just general company politics. I think that making sure that you have bridges, and by that I mean people who are bicultural in your team, bilingual preferably, so that there is, just to make sure that what we said is what they understood, or what they said is what we understood as well. I think there also is transparency. We should promote transparency, which is not always there in China. I think we struggle with those kind of things a lot.
So, I'm going to skip quickly to Chang. Chang, you actually did a startup in China, right? So you wore the shoes the other way. Can you share with us just really quickly some of the lessons learned from having toiled in the big market like China?
Yeah, so for background, in 2012, I went to China and I co-founded a startup with my friend from college. He's still running it today, and he has over 100 employees in Beijing. He's doing very well. But I left the company in 2013 and came back to the U.S. for my then boyfriend, now fiance, and family, and everyone. Like a lot of personal reasons why I should be here right now. So it's super early. We were super green, first-time founders, and some of the struggles and some things I would advise you to think about is, for example, I don't think our investor was sophisticated. I think our investor was pretty capricious, and they wanted one thing for a few months and different thing in another few months, and just disappeared off the face of the earth for a while as well. So it's like we were unsophisticated founders as well, but we probably spent a lot more time spinning our wheels and figuring out what our true business was, and our investor was not the best positioned or the best advisor for us at that stage. So there's definitely a lot of that. And the second issue that I came across was on the hiring side, on the talent side. Like we were based in Beijing, we were based in the Silicon Valley of Beijing, but the ecosystem was definitely not as mature as it is in the US. So there just aren't as many startups around you that's done the same thing, and the learning cycle is not the same at all. So on the hiring side, like I could attract the best talent, but however, there just wasn't a way for everyone to learn quickly. I couldn't just say, you should own marketing, and then they would know where to learn and to own marketing. They were looking to me like, what do I do? I was like, I've never done this before either. Like, we need to figure it out, but there's no guidance and not an ecosystem around. And that's something that's also really tough, and why I wanted to come back to the Silicon Valley and to learn the best practices. So the next time I do something, then I will be able to build a team, and I will be able to compensate for the earlier ecosystem.
Great. Marc, I don't want to speak for you, but you have some experience, some of which you can reveal and some of which you can't, about China and U.S. business. So maybe some experiences.
Well, I mean, I've been going through a China indoctrination period for about the last year and a half of really understanding, because consumers in China are embracing VR in a way that they are not here yet. And so it's become this, kind of, you have to know what's going on to really understand what's working and what's not working. And I'm just extremely impressed with the way the Chinese consumer, the consumer signals and the willingness on the part of consumers to try new things and to get out there and, test things out. But it's showing us some things that I believe we can really learn in the rest of the world in the way consumer engagement is going on in some of these new media.
Terrific.
I mean, in terms of like lessons, I think a lot of the things that Gary said were extremely important. It's like, I mean, that's true of any cross-border deals, but I think especially between China and the United States, you have to make sure that you're kind of understanding the norms of business, which can differ at times, and spend a lot of time on clarification. That's clearly
Bert,
the case.
Any thoughts there? Because you've done some too.
Yeah, I mean, actually, just today, Mattel, there's a press release around a partnership we have with an early stage company in China, Baby Tree, which is the biggest platform for families on the planet. Kind of think baby center for China. So, I mean, a lot of what Gary said as well. I would say, you know, I personally see a lot of money, China money, kind of flowing into the space right now, especially around kids and entertainment and edutainment and the EDU channel. I think it's just the market there is catching up a little bit. The consumer demand is asking for it, and frankly, the Series A market is maybe a little bit more open over there right now. My advice would just be just know that the rules are different, right? And know that there's probably things that you don't know, and someone waving a big check at you, there's typically a long story there, whether it's China or not, and it's probably twice as long if you have to spend the time clarifying it. So I would just say,
Terrific.
there's a lot there, but be careful.
Well, I'm going to do a quick Q&A, if I may. I'm looking for a few questions from the audience before we wrap up. So with that, any show of hands, anybody's got any questions about what's been spoken about today so far? Any disagreements? Could be some disagreements. Yes, man in the
I
center.
have a question. So the Chang, is it? Okay, yes. So what would be your typical deal structure if you're thinking about investing in a media or like a tech company? If I can ask such a broad generic question.
Yeah. Our model is that we invest $1 to $10 million checks for first check. We reserve most of our fund for follow-on capital. So we will do our pro rata. We actually have a larger vehicle that we call an opportunity fund that will invest even further when a company's valuation is so high that the reserves are not enough in the core fund. And we tend to make very few investments a year per partner, so we have a very concentrated model. We try to be high conviction investors in the companies that we do support, because we want to have enough time to actively work with the companies and to help them in every aspect.
Okay, and in terms of the equity structures, is it more like 80-20 in favor of the venture capital fund? Or?
Yeah, we do have an ownership target.
The lady in the back, please. The lady, yes.
This is for Bert at Mattel. I wanted to know that we go to YouTube tools for content. I have this popular YouTube site that children's companies made my toys because of my YouTube channel. I wanted to know if Mattel partners up with children's companies that are smaller than them so that we can work together for content.
Sure.
So if I can repeat the question, so the lady there has a toy company with some content on YouTube, and she wants to know if a large player like Mattel would be interested in either a partnership or some sort of a collaboration to take advantage of these particular markets that you've created for yourself.
Short answer is sure. See me after.
So we're making deals as we're talking. The gentleman there, please.
Wondering if Gary, you could comment on, some of the Wanda deals being cut off lately.
Oh, you mean the big studio deals? So,
I mean, if the big guys can't do it, the ones that say about the smaller guys.
oh, okay. Well, I don't know if they can't. They're doing it.
I can comment on.
So let me repeat the question, Gary. So the question is, comment on the big studio deals between China and the U.S. And if we have challenges with those big deals, how are the little guys going to manage and get an edge in?
Well, I thought you were going to ask me about what's happening to Wanda right now.
No comment.
I think that the big companies like Wanda, they were targeting basically the big deals. I mean, I think it's over a certain amount of money. They have a threshold. I don't know about the other studios in China. I think that it's if you have an idea and you have a proposal, there's various ways you can do the movie, either as a assisted production or co-production. And if you're looking for funding, there's a part of Wanda that does that. But usually, their deals are much larger than, I would say, let's say, an indie kind of movie.
So actually, I have a view of that. The market recently, in the last year and 18 months, deal size have gotten larger between China and the US. And a lot of that is driven by the reform that's going on within the government and the commercial side. The thing you really need to look at is how the commercial industries and the government state agenda kind of work together. And there's a big push, and you can read it up in what's called the 13 5-year plan. They have it every 5 years. They have a plan that talks about where they want the state to go. And it increases opportunities within different sectors, as well as financing, support, and all of that. And so there was a push to go into the entertainment industry because of soft power, and that's why there was a lot of effort there. That being said, one of the things you're calling out is the ability to manage and integrate, and that's still years to come. But for small companies, I do think there are huge opportunities, and there's a lot of privately owned enterprises in China that is trying to actually accelerate their growth. They don't have necessarily all the weight of a state-owned enterprise. They have the agility, and they're going to be making decisions in a much more kind of fluid way. Some of the discussions we've just had here, and just to close up, those deals, you're going to work a lot of effort and a lot of time, but that deal is only done at the very end. So all that time you spend ahead with your investors, you need to be very careful because you could be distracted down the wrong path. But anyways, I'll pause there, and I think we're having to close up now, right? So we'll be here for the rest of the day and looking forward to more discussions also at the rooftop. Thank you very much.